Hello friends, this is Vidyut Vishwas and welcome to my channel Hidden Gem of Stock Market by Vidyut Vishwas. Friends, today I will discuss about a company named FDC Limited. I think you don't know about this company, but its product is very familiar to us. Many of the product is we are using regularly. Just electoral. We all know about the oral rehydration, salt and electoral is very familiar to us, and also there are many products. I will not go to discussing all the products, but I will obviously discuss about the some checklist, on which basis I am selecting stock. So some technical checklist and also some fundamental checklist I will discuss at this video. Actually, main purpose of this video is how I am selecting stock with the base of technical and fundamental checklist. So first I will go to the checklist, and after that so, which is the checklist? First, obviously, I am a technical analyst. So, obviously, I will go to take the help of the technical charts. After, I will look after the what is the business growth of this company. Is the sales and profits are growing quarter after quarter, or year after year after year, or suppose the sales and profit are stagnant from few years, but suddenly there is a growth of the sales and profit. So then we will have to check, is it sustainable or not. So we will have to check next few quarters also, so whether it is the profit and sales are sustaining or not. And another main checkpoints of my fundamental analysis is the debt. Is the company is debt free or not? You all know that debt is always a liability of a company. So if you have a loan, then obviously you will have to pay every month interest, and also loan interest. Obviously I will pay loan from my profits only. So obviously it will reduce the profit. So if the company is a debt free or very negligible debt, so obviously I will prefer a company having very good technical charts or fundamental. But suppose some you got a company having very good technical chart and very good fundamental, and also another company having very good technical and very good fundamental, but one company having very less or negligible debt, or another company having high debt. So obviously within these two, I will select the company which having the less debt. And also I will go to the brand value of the company. Is the company having some few goods brands or not? And at the end of the my analysis, I will, if everything is fulfilled, then I will check the risks, how much risks associated with it, because I am taking entry on the basis of technical analysis only. So at the technical analysis, you need to know where to cut your loss. If your analysis will go wrong, then where to exit. So these are my checklist for any analysis. So last, as per my checklist, first I will go to the my technical chart. See, this is the technical chart of the FDC. See, there is a downtrend. First, I will draw the tail line. So there is a clear-cut downtrend with momentum. Sorry, friends. So from here to here, there is a clear-cut downtrend, and with a huge momentum, and it's continuously giving the lower high, lower low. And see, at this point, it's clearly broke the downtrend line. And we all know, those who are following me regularly, they all know that breaking of trend line means changing of momentum. Obviously, it may not be go at higher side immediately, but obviously momentum will change. It may be go to the sideways or uptrend. But when it will go to the uptrend, when it will confirm that it will go to the it convert to the uptrend, when it will break the last high. See, there is a consolidation zone, clear cut consolidation happening at this zone, and all the candles and almost they are going side by side. And see here, it's break that sideways movement also, and volume is also high. And another positive thing is, see, at the whole downtrend, there is a very minimum volume. But this time, at the time of breaking, it's given very good. volume. So it's given a breakout from the downtrend line as well as sideways movement, as well as from his sideways movement. So it is a very good sign in that it can go up to this point. But why I am expecting from this company me more than this move, and that's thing hidden at its multi time frame chart. So those who are following me regularly, they know always I am taking confirmation from the multi time frame chart. So let's go to the multi time frame chart. See this. See, as per monthly chart, there is a clear cut consolidation from the last 5 years. This high it's given at the 2015, and see this is the highest point of its consolidation, and obviously we will have to mark the lowest point, maximum rejection point. See, from this point after touching this line, it's rejected price, and here also it's rejected. It's the first time it's closed above this line in and clear cut closing there is, but it's rejected from here. And after that, see, many rejection after touching this line, and here also, and finally is break this zone. It is a very strong supply zone from the last 5 years, and finally it's break this zone with huge volume. And after that, it's after the breaking out is not the everything. After the breaking out, we will have to check the breakout is sustainable or not. And see, it's holding from last two candle. Obviously, after the breakout, the next candle is red candle, and it's a scary candle, but there is volume is very less. So selling interest is very less here. And also next candle is red, but it's a doji with a long candle. Long candle means there is a huge buying from the bottom side. And see here, it's after touching the supply zone is bounce back. So it is. So we can say that monthly chart is very good. Means it's a breakout, the breakout from the supply zone with a huge volume, and now it's became the demand zone, and it's when it's rejected, downward movement rejected from this demand zone, that demand zone is confirmed. So I will. So now what to do? I will put a stop loss below this long tail, because buying happening for here. Below this long tail, I will say that is around the 315. So 315 weekly closing basis will be my stop loss. And now price is the 343. So my risk is the 28 rupees. So 28 rupees divided by 343, that is my risk is only 7 to 8%. That is risk is very favorable. And now the another points. So business growth. So business growth, see here. For at the 2015-16 to 2019-20, there is a clear cut growth at the revenue from operation, and also net profit from the last few years, 2016 to 19, it's a stagnant. But this year there is a suddenly jump at the 1920, and also EBITDA also stagnant from the last 4 years, but this year there is a sudden jump. And also EBITDA growth, that is a very huge year on year basis comparatively this year. At the 2015-16, there is a growth of 11% compared with the 14-15, and there is a also 7% growth at the 16-17. And but at the 17-19, there is a minus 5% growth, and 18-19 there is only 0.19% growth. But this year it's suddenly there is a growth of 19-20%. So this is a huge. So let's see, is it such next point is it sustainable or not? Obviously we will have to check. So is it sustainable or not? We need to check the skinner.com. I always preparing this one. See, last September quarter result is in front of 346 crore at the September 2019. At this quarter there is 371 crore, and profit is 54 crore, and this quarter is the 84 crore. This is a very good figure, I think. But quarterly basis, its result is good. But I think I am always taking the sustainability as the monthly, sorry, yearly basis. See, from the if you will see here from the March from this figure, there is little bit stagnant up to 2018. There is a little drop or little jump at the sales, but see suddenly at the March there is a almost 30 March 2020 there is almost 30% growth, and also it is here this year this is a TTM, and this year also it is sustaining, it is holding that figure instead of COVID situation and all this. So this is holding its growth. That means we can conclude that this growth is sustainable. And also see that there is a sudden jump in profit at the March 2020, and this year also TTM profit is a 309. That is also very good. That means we can conclude that it's holding its growth. So this growth is a sustainable. And also see the another few points. Let's see, there is also they having very good. Their mainly business is a domestic business, and they having very good brands. Some brands at the domestic market like GP, Electoral, and see they having huge market share, and market share is increasing continuously year after year. GP having the market share of the 19.6% at the 2015-16, and now market share is the 24%. So there is a sustainable growth at the means their leading product. Also Electoral, see that at the Electoral having the 72% market share, and it's constantly increasing market share year after year. So that's having it's having very good some brand, well-known brand, and that's having a very huge growth year after year. Growth visible is there. So this company, my next point is the brand value. So this company having good brands, and brand is growing and continuously capturing market, continuously increasing the market share. And now the growth at the domestic business, see here, they're having 19% international business and 81% domestic business. And see, domestic business at the 2019-20 is grow 19% growth. So obviously, so there is a good growth at the 1920. I told you up to 2080 there is the stagnant, but there is a sudden growth at the 1920, and after that quarter month this year also at the TTM data we seen that growth is sustainable. And also see the international business, there is a 50% growth compared with the 1890 to 1922. So we can say the growth is sustainable. So now friends, this is all my you see that all my points. Technical charts is very good. Business growth, yes, there is a sudden jump in the business growth, and we check the sustainability of it. Also now next point is the depth. So for checking the depth again, I will go to the Skinner. See, depth is only 7 crore, and in front of 7 crore, there is a huge reserve. So that is also very positive. And band value, I already shown you that it's having some very good bands, and risk also is a 7 to 8 within the 7 to 8% range. So all my checklist is fulfilled for this company. So this is a for me this company is a good buy. So but friends, before completing this presentation, I want to share one thing that I am not a SEBI registered analyst, so I don't have any authority to share any recommendation with you. I use my analysis for learning purpose only. And also, please, friends, if my analysis is good and it's helpful for you, please like and share, and also drop a comment where to improve myself.